Good morning, traders. TGIF. Good morning, Stelios.
Hello, Mr. K. How are you?
Yeah, I'm good, man. I'm good. I'm happy we made it again to the Friday.
Oh man, yeah.
Another week, another dollar, well, actually not too much of another dollar, but yeah, it's been an interesting week. Let's put it that way. And we are finally seeing the end of it. So
Yep.
let's run quickly through the comments and what's been happening overnight. And as usual, we start in China. And the first thing that popped up on the screens overnight was the Chinese developer Country Garden failing to pay some coupons as well. So after Evergrande, that's the next kind of giant who is biting the dust and could default. There are debt restructuring talks going on already, but for sure it's not helping the impression that we have about how affairs go in China. There's been talks about $139 billion worth as well of troubled local government loans going into the provincial debt obligations, and they are trying to get that money via new bond sales. The picture in China doesn't improve, right, still?
No, it doesn't. And China is arguably the driver of the world at the moment, right? I mean, in terms of commerce, in terms of everything, and it's at least one of the two main engines of the world. And if China is not doing well, then it's an issue for the whole world.
Yeah. I mean, the thing, and then as well, we had those loan data out, and the Chinese bank loans at our levels that we haven't seen such a low level since 2009. And then on the other hand, then we've got the PBOC increasing actually their defense against the weaker yuan, and where the models were showing the expected rate being around 721.90, nearly 722, they fixed it below 716. So they are a full 600 points below where the market is really trading. So they call it their, what is it again, their buffer? They have a special word for that.
Do they? I don't remember it.
I can't remember the exact term. It just escapes me right now. But and then we have the CNH trading around 725. So we're still having trouble to break above 725, and I guess that's somewhere due to that PBOC really trying to fight against the speed of the Chinese yuan weakening. But I think it's still an inevitable situation that where I reckon the Chinese yuan has really very little scope to strengthen, especially that they keep piling up problems with their companies, and that they are still trying to inject liquidity in the system, and we are perhaps still looking at some lower rates over there as well. So that's for what's happening in China. Again, not a great sight when one of the major world engines is sputtering. It's hard to get positive on anything over there. Over to Japan, and there was this article in the Japanese press on the Nikkei last night saying that the Japanese life insurance companies are poised to buy more ultra-long Japanese government bonds. 7 out of 9 life insurers that they think that the JGB yields rise above 0.5% is a positive factor for buying government debt. So they're not even waiting for it to play out, really, the rise in Japanese yields to already be happy with what they could get. I'm just going to quickly have a look at where they are, those 30-year yields. They are at 1.5%. So the article says that the 30-year bond yields of 1.5 to 2% become attractive as an investment. So they're not even waiting for it. We are there. We are at 1.5%, and so in the next 50 BPs, they are going to be very interested to buy long-term debt. Well,
and this is, sorry, Kay, this is corporates buying long-term debt.
Life insurers.
Life insurers, okay.
Yeah, it's those guys.
Do you think there's government? How should I say it nicely? Sorry, no. Is it driven by the government? Nudging, nice word, Mike. Nudged by the government. I don't know.
I would not think so, because those life insurers are pretty big institutions, right? They are the ones. I reckon with JPIF or GPIF, government pension fund in Japan, being those whales who invest so much in US bonds, right? Usually, but if they go back home, well, I mean, the market is trying to put one and one together, and saying that it may actually weigh on the US bond market if the Japanese go back home. On the other side, I'm not sure if that's really positive yet. If they don't wait for a possible Bank of Japan letting the yields go a little bit in the future, they're not even waiting for it. They've been so yield starved at home for decades that now whenever they see some form of yield, they are really happy to jump onto anything. But I wouldn't have thought that this is a positive development for yen as such, because they are heavy enough to keep actually the yields depressed themselves if they step in the market, right? All right, yeah. That's for Japan. What else have I noted? Okay, I think barring the ping pong that we still have between China and the US, and possibly now Sunak looking to jump on the bandwagon to ban or to restrict some Chinese tech investments, which is an additional weight on the yuan shoulder. There's not much new just in the comments, I would say. So we can go over to what's been happening, and let's do it chronologically. First of all, the CPI. So that was covered live on Face. We are not going to spend too much time over it. We've seen these moves. We tried to break out in the euro dollar. We tried to break above 128 in the cable, for instance. We tried to go above 66 in the Aussie dollar, just to name a few. That got quickly reversed. We hang around or just below the 4% level in the tens in the US for a while. And then all of a sudden the market went like, well, hang on a little bit. It's perhaps not going as high as we think, but then it's not really coming off too fast either. And then we had the confirmation on that 30-year bond auction. Okay, it wasn't a disaster, but it wasn't great either. So there was about a BP above the when issued, but yeah, nearly 1.5 BP. So that wasn't really great. And at the time, the yield started to rise again, especially on the longer end of the curve. So that we saw then a reversal in the dollar. We saw everything take the other side. We are trading at a relative, very close to the 145 again in the dollar yen. We're trading back below 110 in the euro dollar, for instance. But if we still look at everything, and I spoke about that, about those ranges, perhaps barring the dollar yen, where the yen is really still quite weak, and the commodity currencies. But if you look at those things, and when the options market was relatively right again, they were pricing in ranges instead of breakouts, right? And also there wasn't very much of a skew between the puts and the calls. And what we have seen, if you look at the euro dollar, for instance, if you look at the cable, for instance, is really we stuck inside that range, and we are still relatively in those ranges in the majors. Still, what do you make of it?
I'm sorry, I was on a call. What were you talking about? Sorry.
What did you make when with a few hours now that you saw the reaction after the CPI, the reaction in the yields, the reaction on the 30-year bond auction. Is there anything that you take away from it? Is there anything new? I would personally, I don't see it, but
yeah, it's well, first of all, the numbers. Okay, so it was slightly disappointing. I've been taking the under on CPI and core CPI for a while, and it's almost always, actually, no, probably always happening that way. Overall, the direction is still there. And yes, we were taking out a 0% month and adding whatever month came out. So it was always difficult to underperform, to go a lot lower from this print, at least not on this monthly print. But overall direction is still there. What do I make of markets reacting to it? Well, initially the reaction kind of made sense, a little bit of sense. So yields tried to dip a bit, metals rallied a bit, but then we had that auction, which was well, not a very good auction, and the yield was quite a bit higher than the last one. So markets are still not buying it. Let's put it that way. Markets are probably still thinking higher for longer, and the inflation battle has not been won yet. And to a degree, they're right, but it's obviously depends on how inflation moves on from here. But to answer your question, the reaction, I didn't see something that was crystal clear that said, oh yeah, this is exactly, that happened because of this and that. There's still a lack of direction.
Yeah, I completely agree. As I said, I don't have any new news on what we saw. And I think, yeah, a lot of those yield things are really probably treasury issuances and the market more than even positioning. Let's forget about that for just a second. But just the fact yesterday, I don't think we got too much fresh news to say like, okay, this is going to mean a fresh direction for the dollar. Yes, the dollar is doing better because the yields are up again. But did we get any new news? I would argue that it's not too much, right?
Yeah, I would say that we got another tiny, small, little Lego brick towards the goal, which is central banks basically stopping and eventually reversing policy. So we got another little, like I said, another little step towards that direction.
Yeah, but then what's true in the US is probably going to be through elsewhere as well, right?
Yeah.
Yeah, that's the thing. Yeah. That makes the trade a little more complicated than it would seem. So, of course, the Fed is the biggest one, and it's the leader, and they injected more as well than anyone else over the pandemic. Let's not forget that.
Yeah.
But still, I mean, it's going to have whatever the Fed does. The others are at least in parts going to follow suit, right? And I'm going to show just the differentials in a minute.
And isn't it amazing that as soon as the Fed showed really proper doubt that there's going to be more hikes, everybody switched?
Yeah.
I mean, isn't it amazing?
No later than 20 minutes ago, ECB Lane, the head economist in the ECB came out on a podcast saying that he expects interest rates to settle at low, not super low, but low levels after the current inflation shock. I mean, this is just, I mean, what more of a confirmation do you want of what we just said, right?
Yep.
Okay.
And, and we were saying this before the Fed was, I don't want to say pivoting, but, before the Fed effectively, showed us that they might be stopping.
Absolutely.
Might have even stopped already. We were saying this before that, the Fed starts something, everybody follows, no matter what happens. And even the UK, with 8% inflation or wherever it is, 7 and a bit, they're also turning on the dovish side while they really shouldn't yet. Yeah. But anyway, let's move on.
Absolutely. Okay, so then And then I have, before I move on over to Mexico, we've had those this federal budget balance out. Now, it came out around the prior number, and I don't see why they would have expected this number to halve. I fail to see why, because if you look at what they spend, even on Ukraine and stuff like that, I don't see why the expectations were that low. So we came out again around the prior numbers. That puts the expected deficit to reach 2 trillion. Is that what you said?
2 trillion, yeah. Amazing.
Yeah, but as I said, there's summer sales on the printer, so that should be all right. I mean, they can print more, right? But I know it's horrendous, but haven't we heard that for the past 3 decades? Yeah, I'm not sure if the market is even trading that. If anything, it could actually mean that that those yields are going to remain sticky higher for longer, right? If you look at it from that angle. On the other side, it should, in theory, not be good for risk and stuff like that. But if the market doesn't trade something, why would we?
I think the way to look at it is this: if the deficit is bigger than expected, that means it needs to be covered somehow. How does it get covered? With debt? The world, well, if you have more supply of debt, that's not good for yields. It means that they're going higher. But eventually, after a point where if yields remain high for long, we can see the damage that gets done to the economy with every aspect of it. So what does that mean? The central bank steps in, starts buying again.
Comes in waves.
As simple as that. Yeah, as simple as that.
That's your what is it? 7-8 years of economic cycles explained in 30 seconds by Stelios. That's exactly that.
Unfortunately. That's how it is. That's the problem.
Unfortunate, but on the other way, that gives us an idea of how those things can trade and how the waves are coming along, right?
Yep.
Yeah. All right. Then Mexico, they left their interest rates unchanged. As I said yesterday, there was this small outside risk of them actually cutting because they were a little bit dovish on the prior meeting, and we've seen the Banco do Brasil already cutting 50 BPs. Has to be said, Mexico is not your ordinary South American country, right? They are the manufacturing of the US. They have their exports are very good. The interest rates are that high, and even though their inflation was coming down slowly, they now said that they would maintain the same path and keep interest rates at the same level for an extended period. Initially, the Mexican peso strengthened somewhat, but then got a little knock on the head. For whatever reason, I guess it's more positioning and technical than anything else. This 17 in $MEX seems to attract a few buyers, or at least take profit buyers for now. And also Euromex flew higher a little bit. It's all seemingly starting to quiet down a bit. And it looks as if the euro, which was very big until Lane spoke on the cross side, is now losing a bit of steam as well. Oh, let me kill my squawk for a sec. Okay, that for Mexico. Then we had this balance sheet coming out. It's that should, in theory, come off, but it's not coming off as fast as we may expect. Harker, a bit of wishy-washy, not sure that he had any impact at all on the market. Then we had the Kiwi business climate coming out low, much lower than expected, lower than the prior. Kiwi got a little knock on the head, and we are just along the 60 big figure line. We're gonna have a look at that later. RBA came out with some comments like really open door, data dependent like everybody else, and not a lot to take away from that. Aussie remains, let's say, on the defensive without breaking new lows so far. then we had the UK data, and for the UK data, I have a special today.
No, we can't hear it because I guess Zoom is taking sound only from the from one window, or I don't know actually.
But you see the image.
Yes, it was a sea of green today.
Exactly. And yeah, we had those numbers out, and that was really, they were really very, very good. Much better than, because the market was like wondering, me included, because yesterday I told you that I was from looking at a positive towards the sterling, towards more neutral, and I told you this this set of data would be important, and it puts me back into a more positive side on the sterling, I must say. I'm going to be looking to buy some sterling dips in some way, trying to trade it from the longer end. I'm not inclined to pay up too much for stuff right now, especially not on a Friday. But this is looking good, right? This is taking away quite a bit of uncertainty. And it's not only the GDP, right? If you look at the business investment, even if it's coming out lower than the expectations, it's higher than the prior.
Yes.
This one is, sorry?
I just said yes. It's
it's
positive any way you look at it.
Yeah, exactly. It is, like we say, a sea of green. And the trade balance, because we've been talking about this trade balance, it shows a better number, but sometimes it can be hidden by some weaker activity. We have seen weaker activity versus towards the EU, but the non-EU is actually better than the expectations. Activity numbers are coming off, but they're only 0.5% lower than what they were before. So there's not a big difference. So the whole of the report looks very positive, in my opinion, right? So that is the takeaway from this one. As I said, it doesn't really, the move has been subdued in the sterling so far, but I must say that it puts me back on with a better bias towards the sterling. Again, I think maybe next week we will have the fresh wave. Friday, people not wanting to take too much position, so we have to we'll keep an eye on. And I was saying in the room this morning, this could be a case of, if you get weak data out of Kiwiland and you get strong data in the UK, it could be worth keeping an eye on that cross, for instance. Or euro sterling, if we really start to fail up 86, 60, 70, and that could be one that goes back to 86, the figure, for instance. Then we had the final CPI readings out of Europe. A tick difference here or there, nothing really major. The word sticky remains over there, but nothing really major difference from preliminary. So there wasn't a big shock. Euro ticked up just slightly on the back of those on the back of this combination, was hanging around 110 the figure for a while, and now it's losing a bit of steam. Then we had those new loans data out, as I already mentioned, out of China, which is really well, they are fragile numbers. There's no other word for what's happening in China right now. And that is for what we had. Looking ahead, for the next, we will have some additional industrial production numbers out for June. That could create a small wave, perhaps. But since we had Banksy already behind us, that is probably not going to give too much. We have the final PPI readings for July out in the US. They could be movers, but I'd say only if they vary a lot from the preliminary data, that we had before. If everything comes out relatively as expected, maybe this market is just going to slowly flow into the weekend. If nothing comes out of this, perhaps for the afternoon, the Michigan will be actually the bigger mover. We've seen The short-term inflation expectations coming down the last time. Now they're expected to tick up a little bit. And the 5-year has been a relatively sticky around the 3% mark. So if everything is equal, I would say look at perhaps the consumer expectations and sentiment numbers perhaps being the bigger mover ahead of the weekend. Now that's it for me for what's happening on the data and news front. Stel, do you have anything else to talk about?
Not really. I just want to say about PPI today. I think it could be important. You know, the year-on-year PPI is expected to go up from 0.1 to 0.7. I really wouldn't be surprised if we see a negative print. And if we do, then that's going to have an effect, obviously, on markets. But anything other than that, anything closer to expectations, I would just ignore, I think, for now.
Okay.
So, yeah.
Yeah. Okay, got it. Thanks. Yeah, that's what we always say. I mean, look at what we had already. Look at the expectations, and then according to that, you can form your bias. Something strange happened. Okay, we know the U.S. yields have been ticking up again, but actually the twos are only like 5-7 BPs higher. But then look at what happened this morning on the Bund side of things. European yields are coming off, and as I was saying, we were talking about that in the room. It's been a bit bizarre this move, and we're still hanging around the lows. And I think finally the market is starting to take notice of that, because euro dollar lost 25 points in the past half hour or so. That's a bit of a strange one, and I wouldn't really be able to pinpoint at why exactly German rates are or European yields are coming off. If anyone in our chat room has an idea, or in our webinar chat or our own chat room, be welcome to post it. But that's a bit of a strange one, and I think finally it weighs a little bit on that euro dollar. But speaking about that euro dollar, it's so hard to break ranges, so hard. We've been trading along trend lines around FIBs, but basically this thing is for in the short term 109.5, 110.5. We've had 10 points outside to the top side yesterday on a try, and we had a test of this trend line coming in here the other day on a low. But it's very hard to break ranges. We really need to break this underside of 109, 10, even stretch it to 108.80 before really this can accelerate. And on the top side, we have to confirm above this 110.5 and hold there to really be able to start to move back into the 111s, and why not 112. For the time being, it seems very tough. Now, never say never. It's weakening a little bit, but again, if we look at the volatility in the FX option market, it is coming down. So the options market, at least, thinks that we are going to slow down into August now. We did have a lot of information from the central banks, from the CPI, from the jobs market lately, so it may be that we are just going to slowly tighten up those ranges even more, for as long as we don't break and hold, break and hold and cap. So yeah, that's it. What for the euro dollar is concerned. Yes, sterling should be more interesting, but then the sterling is also not helping much. We saw failures yesterday above 128, and then today a bit of a jump from this level here, 70.80. But again, we're back below 127. It's hesitant. I would have said sterling should have ticked up more than what it did on such a GDP reading, because it does take away uncertainty from the market. Okay, but again, there may be some more waves coming perhaps into next week or so. But fact is, on the euro sterling, we tried above this 86.60 again. We didn't make it up to 86.70s, and we are back below. So that may be already enough for the short term. to see us come back to trade closer to this 86 figure 10 level, which I think is a real possibility right now. Moving over to the dollar yen, it's close, but not yet breaking. Okay, 145 figure 10, everybody knows the level. That is where it needs to break to have possibility of moving into the 146s, where the next layer of resistance should lie. Remember, the 146 outside of interventions was where we started from. The pretty big decline on the US CPI starting to come off. Okay, this was helped by interventions, but the CPI did its job as well in what we've seen in those moves. Okay, so and now 145 big level, but then 146, as I would argue, is going to be a big level as well. We are not yet breaking. Euro yen is losing a little bit of steam, holding the dollar yen in place here. But of what we've seen, what's happening in Japan, the slowness of the JGB moves, we're still below 60 BP on the 10s. It's probably going to keep this in a bid on dips scenario for now, and I would already say 144 is a candidate for holding 143.5 again as well. So I guess we are going to trade in ranges, but from the bid side of things. And don't be surprised if one day or it's Friday, why not? You know, we're going for a round of stops above 145, and then we will see what it does at 45. Does it hold or does it fail? That for the dollar yen. There's a couple of things that I want to mention. I'm not going to run over everything. We know that the Canadian dollar is still on the defensive. We know that oil is back below 83 bucks, which looks like a failure. It's trading at 82.65 right now. So we are back below that 83.5 bucks on WTI, and Canada shows its weakness straight away again. We are now trading around this trend line. So watch out for the dollar CAD. If this starts to hold here, this 134.30.50 zone, I think there is a possibility to get into the 135s. Aussie and Kiwi on the defensive, as we know. Chinese worries, Kiwi weaker data. It's all not very good. And then one to keep an eye on here, because of those failures in oil, this Noki is really getting battered. Look at how, and that yesterday morning when oil was doing the tops, we were 11.15 on the Euro Noki. We're 2.5% higher in one go. It's a lot, you know, for any currency, and it's not really an emerging market currency, this Noki. So watch out for the Noki. I'm not going to stand in the way of this just as yet. Okay, I'm a little worried for the Norwegian kroner, because this is a big turnaround. Yeah, we've seen the inflation coming off, but it's still a bit sticky. But I mean, this is telling me that the market is just not ready to buy this Norwegian kroner for long, for the long or medium term. And I know, Stel, you're watching this. This is a bit alarming, right?
Yeah, you know, we talk about the Noki almost every day, and
yeah,
I'm always, well, fundamentally, I'm very positive on the Noki. So basically, I want to be short all these pairs, but the price action is very erratic, and when you have a central bank basically selling the crap out of it every week, it's very difficult to get really confident about it. So
yeah, exactly. That's it.
I'm looking at levels a lot higher. Well, not a lot higher, but I'm looking at levels higher, both Euro and dollar Norway, and
this one here, 11.60 to 11.
Yes.
3/4.
Yes.
This one here.
Yes, exactly.
That may be a pretty decent area. But in the meantime, it's scarce. It's scary to stand in front.
Or 1080 to 1085 in the dollar Norway, I like, but we're not close there yet. So
Yeah, there is a bit of decent resistance around 1050. Yeah, your 1080-85 is this area, right?
Yes.
Where we see the shoulders.
And
Yeah.
if you go further left, 2022, there's more action there between 1080. There you go, 1080 and 1090. So, it seems to be a nice area there, but man, it's just so scary.
Today it's scary, and we don't often talk about being scared because we're traders. We are not really scared. We just avoid or step in. But this looks a bit scary to me.
Yeah.
Is the 2.5% in the Nokia is a mover? Is a steep mover in one session. It's a steep move. So be careful if you want to catch a knife in the Norwegian kroner. It's not a very clear chart, but dollar China is is trying, right? We're above 725 again. Keep those levels 728 in mind, okay? I think it's still negative for Chinese yuan. People know what kind of positions I have in the room. I'm looking for at least a decent test of that 728 and a half again, and then we will see whether there's enough power or what the PBOC wants to do. Keep an eye on those fixings, right? In China, they are important because PBOC is sending messages via those fixings. Okay, and I think that is enough for our week, isn't it, Stelios?
I hope it is, man.
Quick look at this oil, because we had the break and now we are starting to fail again. I would though say that we need to close below 82.5 to call it a real failure, but it's starting to have the looks of this April move when we had this gap, break above the prior highs, went up with 283.5, and then ding dong. It starts to have those looks. It's not the same move because here we had a gap on cuts, right? Surprise cuts over a weekend, if I recall well. But it has the same feeling about it. So we need to get back above 83.5 and hold it to push higher, in my opinion. Otherwise, there may be some people who bought the top there. Okay.
Yep.
And I'm going to leave it to that. No?
I will show one chart only. Okay, just one, because you've covered a lot of things.
Okay.
I'll take the screen and show you just this, which is something I've been looking at for a while.
Yeah.
Sorry, excuse me. And we are now about to test. So this is a Friday. Lots of things happen on Fridays, and this has to hold for bulls. I just wrote it in the chat room a few minutes ago. Has to hold. If it doesn't, and especially if we drop below, this line is a 44.50. If we drop below these highs here, so 44.30 or below, then we start looking at downside targets. But if this holds, then we just keep going higher. So big decision to be made for stocks.
I was saying yesterday, I think I'm not sure whether I showed it on the flow show, but at least in the room, I think it's your 44.40, 45.40, and you just watch it or you trade the range, as I said over face, dare to trade ranges, or you watch it and you go with the break either side, right?
The break. Yep, absolutely.
Alrighty.
All right, perfect. Thank you, Kay. That was a very good.
Thank you, Stel, for being with us today. What's for lunch today, Stel?
Cheese pie and something else. My wife has made it, so I don't know what
all right. No delivery today then.
Yeah.
Congrats to Mrs. Stelios. All right. Thanks everybody for being with us every day, and we shall talk to you on Monday again.
Thank you, Kay.
Great
Thanks,
weekend.
everybody.
Stay safe. Don't do anything stupid on a Friday afternoon, okay? We'll talk on Monday. Bye.
Bye-bye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.